Hello and welcome. Thank you for joining us. This is Business Incorporated coming to you live from our global headquarters in Lagos. I'm Chimeze Obi Iwago. On the show today, World Bank to provide up to $500 million to Ghana in the form of a partial risk guarantee over gas deal. South Korea's Kia Motors Corporation signs deal to start assembling cars in Ethiopia. Plus, South Africa, Egypt keep interest rates unchanged. I will begin in Ghana, where the World Bank is expected to provide up to $500 million to that country in the form of a partial risk guarantee for use if the country defaults on payments for gas from the Sankofa field. The guarantee is the largest of its kind to be granted by the bank and provides security to Ghana over gas expected to flow in 2018 from the $7.9 billion offshore oil and gas field being developed by Italy's Eni. The deal was signed with Ghana National Petroleum Corporation. Now, the chief executive of GNPC, Alex Mould, said the country will take 180 million standard cubic feet of gas from the field per day. Eni holds a 44.4% stake in Sankofa. Upstream trader Vital holds 35.6%, while GNPC holds a combined carried and participating interest of 20%. The World Bank will loan $200 million to the Sankofa partners. The gas project is expected to generate about 1,000 megawatts of power to Ghana. And South Africa's central bank kept its benchmark interest rates unchanged at 7% for a third consecutive time this year on Thursday, with a weak economic growth outlook balancing out concerns about inflation. The Reserve Bank said the growth outlook remained constrained, but revised upwards its forecast for this year to 0.4% growth, having previously said the economy would remain at a standstill. In response to the decision to keep rates steady, the rand surrounded gains driven by the U.S. Federal Reserve's call to hold rates. The government's benchmark 2026 bond firmed to its best since August 19. And Egypt's central bank also kept its key interest rates unchanged at a monetary policy meeting on Thursday, confounding a unanimous forecast by analysts that it would hike borrowing costs to curb inflation. Egypt has been struggling to revive its economy since a 2011 revolution drove away tourists and foreign investors, its main source of vital foreign currency. Its reserves have more than halved since to around $16.5 billion in August. The government has been pushing through economic reforms, including energy subsidy cuts and a value-added tax. And in Europe, there was bad news for the zone, with the latest flash purchasing managers index falling to a near two-year low, indicating that the economic upturn in the region is fragile and failing to achieve any real traction. The preliminary PMI from market showed that business activity in the 19-country region fell to 52.6 in September versus 52.9 in August, and below market expectations. Let's cross over now to Frankfurt Stock Exchange and see how the market is digesting this data. Janelle Dumalong, DWTV Channels TV business correspondent, joins me now. Good afternoon, Janelle. Good to see you today. Now, the Eurozone Purchasing Managers Index came in disappointing. How worried are investors, and how is the market reacting to that data?
Yes, investors are pretty worried, and they have reacted quite with a bit of anxiety towards this data. As you can see, the curve behind me, it's sloping quite steeply downwards. And yes, it is because of the data you mentioned. It is a slowdown across the Eurozone, a 20-month low. Now, the authors of the data described growth in the Eurozone as very sluggish, 0.3% for the whole quarter. Now, what that has done, especially here, is raise expectations that the European Central Bank will move to extend its aggressive stimulus stimulus measures. So obviously we have this massive asset buying purchase program that is meant to get inflation up to under 2% and to basically stimulate economic growth. Now that program is due to end in March, but factors like these weak economic data are causing investors to expect an announcement of an extension of this program perhaps in December or even earlier.
Now, aside from that data that has pushed the DAX down, I kind of wonder how the banking stocks are doing right now, particularly Deutsche Bank. It seems the crisis in that bank is yet to be resolved. The bank has just reshuffled leadership of its investment bank amid a cloud of uncertainty over its overall business and balance sheet. Can Deutsche Bank sink the German economy, considering its size, if the bank's crises are not well managed?
You've described the situation perfectly indeed. Deutsche Bank is really in a bit of a mess. And now, you're right, German politicians are certainly starting to get very worried, especially after the news that the U.S. Justice Department slapped a $14 billion fine on Deutsche Bank to settle claims related to its business in mortgage-backed securities. Now, the Social Democrats, that's Chancellor Angela Merkel's junior coalition partner, they actually had a closed doors meeting this week, specifically to discuss Deutsche Bank and its troubles and whether the bank was liquid enough to be able to pay this fee. The Deutsche Bank had only put aside just about half of this in order to cover litigation costs. It already has severe problems with capitalization. It's sitting on a mountain of obligations. So lots and lots of problems there for the Deutsche Bank. Like I said, the politicians are getting involved. They're very worried. On the other hand, it's because they are involved that I don't think the Deutsche Bank would be allowed to have a deleterious effect on the German economy. Well, in the end, the Deutsche Bank is called the Deutsche Bank for a reason. The state will not allow it to fail.
Now, let's just hope that that bank comes out of that crisis as quickly as possible. Now, it's been a very busy week for most central banks. We have the Fed, the BOJ, of course, here in Nigeria, the central bank, and Kenya, Ghana, South Africa. Now, next week, OPEC members are meeting in Algeria. Give us your outlook for next week. What companies and data should we be looking out for, aside from the OPEC meeting?
Yes, exactly. Now, all eyes will definitely be on the national Iranian, and especially the markets are. The Saudis forget they are major rivals in the region, but now they've offered own output to reduce their own supply of oil if the Iranians would freeze theirs at the current level, which is about 3.6 million barrels per day. Now, we know that this has been a long-standing issue. The oil supply glut has caused so many problems. Lower oil prices have seen oil-producing states all over the world see their economies falter. And if this were to happen, then this would be a major compromise to address this problem and to get prices recovering. So investors will definitely have all eyes on those two. And if the reports turn out to be true, it could definitely be a light at the end of the tunnel.
Oh, sure. We look forward to that meeting to see what the outcome would actually be, what the members of OPEC members would come up with in terms of oil stabilization. Thank you very much for your time, Janelle, and do have a wonderful weekend. We move on now to Asia. Markets there ended mixed on Friday as traders continued to digest announcements from the U.S. Federal Reserve and the Bank of Japan. The Nikkei 225 in Japan closed down 53.60 points. The Topix slipped 0.23%. Japanese markets were short on Thursday for a public holiday after climbing nearly 2% on Wednesday when the BOJ announced an overhaul of its monetary policy framework. Chinese mainland markets traded lower, with the Shanghai Composite closing down 8.51 points, while the Shenzhen Composite fell 0.5%. And after the break, we'll look at the U.S. market as the week wraps up. To stay with us.